Hello, ladies and gentlemen. Welcome to this trading mindset masterclass titled Become Comfortable with Being Uncomfortable. Previously, I made a video about the habits of successful traders. I will leave a link to the video down below. When I finished making the video, something felt incomplete. I think the reason for this was because high performance habits only work when you have a high performance mindset. And this means only one thing: being comfortable with being uncomfortable. So, the goal of this masterclass is to apply the work of Tim Grover to financial trading. Tim Grover was the fitness trainer to many NBA superstars, including basketball legends such as Michael Jordan and Kobe Bryant. Tim Grover is also a brilliant writer concerning motivational psychology. In Tim Grover's book, Relentless, the author outlines 13 characteristics of performers who are the best at their respective fields. The book refers to these unique individuals as cleaners. Please note, if you would like to purchase your own copy of Relentless, then please feel free to use the Amazon link below. So, in this video, we will tweak the 13 characteristics of cleaners to find out what it really means to be a high-stakes trader. We will refer to each characteristic as a law because they are not negotiable. Furthermore, in order to emphasize the equal importance of these laws, we will refer to each of them as law number 1. Tim Grover performed a similar exercise in his book Relentless. So let's begin. High stakes law number 1. Comfort equals failure. Look, if you plan to chase the big returns, then most of the time you will be risking either no money or a lot of money. Both scenarios will make you uncomfortable, and you need to be okay with that. For example, investment advisors like to talk about the risk tolerance of their clients. But what exactly does risk tolerance even mean? All human beings are risk averse, and all human beings would like to receive big rewards without taking any risk. So let's be realistic with ourselves. If you want big absolute returns, then you will need to take on big risks. However, the key is knowing how to manage your big risks in a way that is sustainable over the long term. High stakes law number 1. Find your zone, stay there, and then leave. Within the field of self-development, there is a lot of talk about being in the zone. But what exactly is the zone? Well, on page 52 of Relentless, Tim Grover describes the zone as follows. Quote, "In the zone, the only sensation is anger. I see anger simmering under your skin. Never rage, never out of control. Silent." End of quote. Now, does this mean I want you to trade with anger? Well, no. but I want you to trade with focused anger. This is because when you trade, you are going up against the finest financial minds in human history, and they want your money now. So when you sit down at your desk to trade, you need to switch on a controlled anger in your head. This will direct your laser focus on doing the right things at the right time and in the right way. Obviously, this level of intense focus requires frequent breaks. For example, 30 minutes of work followed by 10 minutes of rest. And after 4 hours of intense work, you should probably reduce your intensity levels for the rest of the day. Furthermore, when you stop working, make sure you stop completely. There is a time to work and a time to play, and traders who forget that will experience the problem of trader burnout. High stakes law number 1. Accept who you are and forget everyone else. When you trade, it is usually a bad idea to fight the markets, and it is always a bad idea to fight your personality. So if you enjoy analyzing price charts, then be a technical trader. If you enjoy reading financial reports, then be a value investor. The key is to find a trading style that is a good fit for your personality and lifestyle. The latter point of consideration is of particular importance if you plan to trade around other commitments, such as a full-time job. Your trading style will evolve over time, but avoid the temptation to change your trading style based on what other people are doing. This is because you don't know the circumstances or psychological tendencies of these people. So any attempt to imitate their trading style is just an exercise in futility. High stakes law number 1. Embrace the negativity. When you trade, you are forcing your mind to deal with a wide range of negative impulses, including fear, greed, frustration, FOMO, paralysis by analysis, etc., etc. Now, many trading coaches will try to convince you that it is possible to get rid of these impulses. But you can't get rid of these impulses, and even if you could, why would you want to? Allow me to explain. The impulses in question, fear, greed, frustration, etc., are all products of human evolution. They have allowed modern day Homo sapiens, i.e. human beings, to become the most dominant species on planet Earth. In other words, all of these negative impulses are an intrinsic part of the human mind. You can't get rid of them, and you wouldn't want to, because their existence help you to make good decisions. So when you trade, use all your negative emotions to sharpen your mind against the typical pitfalls of financial speculation, such as trading without a stop loss, taking partial profits without a good reason, etc., etc. High stakes law number 1. Seek out uncertainty. Every day, make a conscious effort to seek out uncertainty within the markets. This is important because uncertainty is the source of volatility, and volatility is the source of profitability. High stakes law number 1, prepare so you always have choices. If you want to be good at finance, then this is what you need to do. Reduce your obligations and enhance your choices. The more choices you have, the more you can reduce your opportunity costs. And opportunity costs will always be your largest trading expense. Therefore, make sure you always maintain an up-to-date watch list. With an up-to-date watch list, if a position ends up being a loser, then you just need to close the position and divert the remaining balance of the initial cash allocation to either 1, a winning position, or 2, a trade idea in your watch list that has the potential to generate a profit. High stakes law number 1, know how to deal with trading losses before they occur. Knowing how to deal with trading losses is probably the most important skill that a high stakes trader needs to master. The second most important skill is knowing how to deal with portfolio drawdowns. If you would like to improve this aspect of your trading, then please allow me to recommend the excellent book Best Loser Wins by Tom Hugard. The book is easy to read and it deals with the issue of trading losses from a psychological perspective. Please note, if you would like to purchase your own copy of Best Loser Wins, then please feel free to use the Amazon link below. But in general, there are 2 types of loss management strategies: concentrated and non-concentrated. With a concentrated strategy, you would use all your cash allocation on a single trade. After trade instigation, you would then monitor the trade. If the market shows any sign of approaching your stop loss, you would manually close the trade. However, as the market moves in your favor, you would move your stop loss accordingly, preferably with an automatic trading stop loss order. You should use this strategy after sudden spikes in market volatility. With a non-concentrated strategy, you would spread your cash allocation across 3 to 5 sequential trades. You would instigate a new trade only after your latest trade achieves a profit milestone. All the trades of your position would have the same stop loss price. If the market moved against you, you would wait for the automatic activation of your stop loss orders. Whenever you instigate a new trade, you would manually move all your previous stop loss orders to the new stop loss price. You should use this strategy during gradual increases in market volatility. High stakes law number 1. Act whilst everyone is thinking and think whilst everyone is acting. During times of high market volatility, most traders waste time with indecision and analysis. And during times of low market volatility, most traders are just too keen to instigate new positions. But high stakes traders are not like most traders. So, when markets become volatile, you should already know which assets you want to trade and how you want to trade them. And when market volatility dries up, you should accept that non-action is probably your best course of action. High stakes law number 1. It is okay to like money. High stakes trading can be fun and rewarding, but usually it is a boring activity whereby you spend most of your time dealing with trading losses and portfolio drawdowns. So don't expect trading to be an enjoyable endeavor. However, if you want big profits more than you hate boredom and drawdowns, then this will be enough to sustain you over the long term. High stakes law number 1. Know when everyone is wrong. Usually, you should only trade when the markets and big money participants are acting in accordance with your trade idea. However, sometimes the markets or big money participants have incorrect views concerning an asset. These situations do not occur often, but when they do occur, you need to be ready because the profit potential will be enormous. High stakes law number 1. Trust no one. Unfortunately, whenever you have a lot of money in a single place, such as the financial markets, this will attract people who are vain, lazy, selfish, foolish, slow, and dishonest. So trust no one. Whenever possible, do your own research with your own data. If you need to purchase data, then use a vendor who does not have a conflict of interest. For example, it would not be a good idea to purchase bond rating data from a company that also sells corporate bonds. High stakes law number 1. If revenge is sweet, then revenge trading is sweeter. Most trading educators admonish their acts of revenge trading, and I don't know why. If you instigate a trade and the market takes your money, then it is only natural to want revenge. Now, I am not saying that revenge should then become your primary goal, and I am not saying that you should pursue this goal at any cost. What I am saying is, embracing your need for revenge will allow you to stick with a good trade idea, even when your market timing isn't very good. High stakes law number 1. Know how to celebrate. Trading is difficult, very difficult. So when you achieve something significant, enjoy the moment. In fact, give yourself 12 hours to enjoy the moment. Go out and treat yourself with the people who care about your trials and tribulations. Sing, dance, and laugh with anyone who is ready to smile with you. Afterwards, go to bed, wake up, and then get back to work. For you see, that is the life of a high stakes trader. Final thoughts. I hope this masterclass will help you to develop the sort of performance mindset that is necessary for aggressive trading. If you have any questions, then please either get in contact with me or leave a comment down below. I will try to reply to all questions and comments within 24 hours. Thank you for your time and happy trading.